So the goal for any investors is to make profit, right? So you invest, you see the stock price goes up, it goes up by like 25%, it goes up by like 50%, it goes up by like 75%. And then at one point comes another question. So when do I cash my profit? Because selling a winner is not that easy. Some people will put a limit of like, oh, I'm up 50% and then I'm good. Well, if you do that, I would like to show you this graph, because this graph shows what happened when you hold your stocks for a very long time and you just wait, which is great because then they come into the triple-digit return club, which is pretty interesting when you are an investor. The chart that you see here are not cherry picking, is actually some of my companies that I bought in 2017 when I quit my job as a private banker and went full-time on Dividend stocks rock. So at that time, I received a check from my pension plan. That was $108,000. I decided to invest it all. So I invest that money between September of 2017 and December of 2017. And those companies are obviously my biggest winners, but just want to show you how holding on your stocks for a very long time could generate a lot more return than capping it at 50%. Of course, it's not that easy, and sometimes you do have to sell your winners and to cash your profit. So today, I'm going to tell you what are my tricks and what I do with my winners and when I cash some profit out of them. So my number one reason to sell a stock, no matter if the company makes money or not in my portfolio, is I review my investment thesis for all my stocks every quarter. What's an investment thesis? The investment thesis is all the reasons why you buy a stock, why you like this company. So most of the time it is more about the narrative, the story you build around that stock that you find interesting and that you want to keep forever. The investment thesis example that you have here is for one of my favorite stock, Alimentation Couche-Tard. So as you can see, there are a few things that I really like about this one. The first one is obviously growth by acquisition, and the second one is all the reasons, all the tools that they have found to grow organically. So they want to do fresh produce, they want to do more promotion, they want to do digital transaction, they want to increase the number of purchase with a loyalty card, and they keep on growing both organically and through acquisitions. So of course, if I review this investment thesis every quarter, at one point I may realize that Alimentation Couche-Tard is not making any acquisitions, or their organic growth initiatives are not working anymore. And at that time, if my investment thesis is not that strong, I'm gonna put a red flag on it and I may eventually sell. So that would be the first sign of a good sell, would be if the company does not meet my investment thesis anymore. In my analysis, there are two parts. The first part is the investment thesis, which is the qualitative, the narrative, the story behind the stock. And the other part is obviously the analysis of all the numbers. So I usually also combine the investment thesis with the dividend triangle. So in this example, we see how Costco dividend triangle is just looking perfect. So you see revenue, earnings, and dividends are increasing steadily. It's actually a bit more difficult to see the dividend growth here because Costco, on top of growing their dividend every year, they also offer a special dividend from time to time. But the long story short here is Costco is growing double-digit everywhere, and you can see how it reflects on the price. Unfortunately, this one, I didn't buy it in 2017. I just bought it last year. So I'm a bit late to the party, but still there is a lot of growth potential for this one. So again, if I look at Costco, and you can see my video in the link description below about that company, if I see that revenues are slowing down and then earnings are slowing down, while eventually the dividend growth will be slower as well, and then it could also send me a second signal that I might have to sell. So I will sell one of my winner when I see that my narrative, the investment thesis, is not as perfect as it was before. Some element starts to not make more sense and they're not exactly aligned with my investment thesis. And then I look at the numbers and telling me exactly the same story, where there's sales slows down and earnings slows down, and then I realize that the company that I once bought is not that company today. So the point here is not to be trigger happy and to sell right up front when there is a bad quarter, but one bad quarter after another bad quarter after a bad investment thesis, then you're starting to see what's going on there, and probably it's time to take some profit and go. So by making sure that my investment thesis and the numbers are aligned, I also make sure that I am selling at a very good time in terms of profit. So the stock price goes up, I see that everything is slowing down, that my investment thesis is not right anymore, and then I will sell. In some cases, like Apple or Alimentation Couche-Tard or Microsoft, well, my investment thesis and numbers keep being right. They're still going towards the same direction. So they keep on growing in my portfolio as well. So what do I do? At what extent do I trim some of my winnings? So before I tell you my ultimate trick to trim and cash some of my profit, I would like to invite you to my next webinar, which is this afternoon. So on March 21st at 1 p.m. Eastern time, I will have a free webinar for you guys. You can register in the link description below. So it's Dividend Stocks Rock /YouTube-webinar. And the webinar is about how to invest in an all-time high market. So today we're talking about how you can sell your winners. And this afternoon, I'm going to tell you what to buy or how to buy it with conviction so you do not make mistakes and you do not put your hard-earned money into a stock that would fail you, cut their dividend, or crash, because we are trading at crazy valuation right now, but there are still ways that you can invest today instead of waiting on the sideline and biting your nails until the end. So register, even if you see that video later on this week or next week, if you register or click on the link below, you will be redirected to the free replay that I will send you by email as well. So as usual, at the end of the presentation, I stay for a good hour to answer all your questions. So if you can attend the live event, you're gonna get the best out of it because you will get to ask all your questions about stocks, about the economy, about strategies. I'm here to help you out. So my ultimate trick to trim of my positions and determine when it's the right time to sell and cash has to do with portfolio management. So instead of building some kind of crazy calculation systems with algorithm or looking at the P ratio and the average yield and the stock price moving average, what I do is I look at my portfolio as a professional portfolio manager. And the first thing I will do is I will review my sector allocation. So as you can see here in this example, a little bit overweight into financials at more than 30% of my portfolio in this specific sector. What does it tell me? Well, I'm overexposed to one single sector. And at this point, I might suffer big time if there's a credit crisis. And this is pretty much something that could happen, right? So then what I would do is I would look at all those stocks, and if I have a company that is a little bit overweight, I would trim a little bit down to maybe try to bring that 30% sector allocation in financials down to like 25 or 20%, just to make sure that I'm not too overexposed. So the first way to trim your stocks is look at your biggest sectors and then look at those stocks and make sure that you do not have like an overweight position. So now, how do you determine that a position is overweight or not, right? So we're gonna end this video about this ultimate trick that I use time and time over. So the trick starts in two parts. The first part is to determine how many companies you want to manage in your portfolio. So give yourself a ball range. On my side, I don't want to go above 40 stocks. Most of the time, I like to have between 30 and 35 positions in my portfolio. In an ideal portfolio, all of those positions would be about equally weighted, right? So it means I should aim at a roughly 3%, 3.5% position in each of those stocks. Over time, for a lot of reasons, some stocks will skyrocket and some others will go down a little bit. So it's impossible to have a perfectly weighted portfolio. However, it doesn't mean that you should not trim them at one point. So what I do is I use DSR Pro tools to look at my combined portfolio together. So not a single portfolio, but all my portfolios, looking at all my positions to have a global view. And then I'll look at my biggest weight. So in this graph, you see that ATD, Alimentation Couche-Tard, Apple, and Microsoft are my top three. Definitely a big overweight for 8.89 and 8% of my portfolio for Couche-Tard and Apple. And those were trimmed not too long ago. So what I did is I determined the maximum amount I'm willing to lose on a single stock. So the question I asked myself is, regardless of the company, so I'm not going to debate if Apple is a great company or not, but I'm going to debate if I'm willing to lose $10,000, $20,000, $50,000 on a single bad investment. So what I do is I look at my position and I imagine them dropping by 50%, which is pretty much the worst case scenario. So I determined that my limit of exposure would be 10% of my portfolio invested in one single stock, so one single idea. If this idea is wrong, this means that my exposure to risk is 5% of all my assets. So it's still a big chunk. Some people will prefer to have a maximum exposure to 6 or 8%, so to have to limit their maximum loss of like 3-4%. That really depends on every investor. It's an arbitrary number. It goes along with your investment tolerance and your risk tolerance as well. So I'm not telling you to use a 10% limit. I'm just telling you that I've used a 10% limit on my side. So every year, once a year, I will look at my portfolio, and whenever I have stocks that are above that, well, that means that they are greatly outperformed over the past couple of months, couple of years, and then I start trimming and cashing some profit. So for Alimentation Couche-Tard, I did sell about 3% of my position in December of 2023. I sold some Apple, some Microsoft a few times over the past few years as well. So just always make sure that I sell at a high price and then I reallocate that money elsewhere across my portfolios. But the long story short is, I let my winners run as long as possible. So I want to benefit from those companies going 200, 300, 400% up. But at the same time, I don't want to be overexposed. So I slowly trim to make sure that I keep a balance in my portfolio. So if that video has helped you, give me a thumbs up, subscribe to the channel to make sure that you do not miss my next video on next Thursday. And until then, don't forget to stay invested.